What's going on, guys? Welcome back to another inter-equity trading video. Today is the start of a brand new series about liquidity and inducements. There's a lot of fluff in the industry about the word inducements. In my opinion, people are kind of just using the word everywhere and overcomplicating things. In this series, I'm going to be explaining to you guys exactly how we use inducements, why it's important, and why it's so powerful on these charts. So today is going to be episode 1. I'm going to be doing multiple episodes, making sure you guys understand everything about it. Without further ado, let's hop right into the charts. All right, guys, so we have two very straightforward and simple diagrams in front of us. Some of you may refer to this as a bullish trend, bullish market structure shift, bullish BOS, whatever you want to call it, and then vice versa over here, maybe bearish trend, bearish market structure shift, whatever terminology you guys want to use. But in these two examples, this bullish example and this bearish example, we're going to be discussing and breaking down, making sure you guys understand everything about these moves, this low to high to low to new high, the purpose of it, all the important components. So first, what we're going to do is talk about this bullish example to the left-hand side. What can we see? The market has printed a low and then a high, okay? Then we had a retracement to the downside, printing this low we have here, okay? And then we had that bullish move to the upside, okay? This is very, very important. And I'm sure you guys have heard it in previous videos now, talking about trades, or just talking about liquidity as a whole and inducements. This move, and we're going to circle this, from low to high is very, very important. It induces buyers into the market. Okay, now some of you guys may ask me, what does that mean? Since we had this bullish move to the upside, again, from this low to this high, retail is going to view this as there's momentum. Okay, we have momentum to the upside. So what's naturally going to happen is people that trade based off patterns without any sort of logic and reasoning behind their analysis, automatically they're going to be looking for areas of interest to the downside. For example, maybe this high that was used as resistance might be used as support now, okay? Or maybe you have retail traders such as maybe like SMC traders that want to see this high taken out. Again, let's label this on to make this a little bit easier for you guys. We'll view this as BOS, and then maybe they want to wait for a price to come into their area of interest down here, some sort of POI, some sort of order block, right? And then they want to take their longs. So the importance behind what we're going over right now is making sure you guys all understand this move from low to high. This induces buyers into the market. The market, typically, after taking out this high, will come down. All right, we'll have pullbacks. That's usually what happens after we have BOSs or market structure shifts. We'll have a pullback, okay? Because there was some resting liquidity above this high, and that's why we see this move now occurring. What typically happens is you can see the market respect these areas, and it's done on purpose, okay? So that's why somehow or sometimes you guys see me take short entries in this area, and I'll target the downside because I understand that buyers enter in this red box, okay? Maybe support and resistance, Fibonacci, whatever you guys want to call it. Previous high, rejected. Now this low is going to get rejected, okay? So the market purposely reacts off here. And then you have that relief to the downside. Remember what we spoke about before? Maybe there's another POI here. Since buyers are induced in the market, I'm going to write this out for you guys. Buyers induced. Buyers are inclined to buy this market. Buyers want to be involved in this market. The market will give another reaction. All right, and would you look at that? Sometimes even, and we're going to draw this out in a little bit of a different scenario here, we'll have a high left, and then market will come down to the downside, tap into this area for retail, for smart money concepts, for break of market structure traders. Then they'll get the push to the upside. Now look what's happening again. Same thing, but just on a smaller scale. We're going to mark this out. Break of structure. So, based off what I've just taught you guys on the bigger perspective, what do you think is going to happen again? We have maybe this area here that could be used as an area buyers want to be taking entries, and then we'll push the new highs sometimes, but then what you'll see is boom. And then would you look at that? We're coming into areas of interest at the low again. This is where buyers want to be buying, but we understand that buyers are induced. We want to be targeting the downside. So this is going to be used as a trap. Okay. And expect false reactions sometimes, and then overall, what you're gonna anticipate and expect is this move back down, okay? Finally taking out the buyers at this low. Why this low, you guys ask? Well, think about this from a big perspective. Remember, we took out this previous high, printing a new high. Buyers are induced in the market. So look how they're entering here. They're entering here. They're entering here. Why? All based off patterns. That's it, based off patterns. No logic, no reasoning behind their analysis. They're just waiting for some sort of high to get taken out, okay? Then a pullback to occur, and they're buying in here. Okay, expecting price to push up, but no, it gives them the false reaction. Now this is usually a sell opportunity back down to the downside to target the lows. Okay, but again, the main focus of this diagram, what I really want you guys to understand is understanding that this low pushes to a new high and induces buyers. So this is now a buyer's market, okay, for retail. We don't buy in this scenario, but retail will be buying. And now let's work on the bearish example, okay? Again, taking everything we just learned from the bullish, now you just want to flip it. You want to invert that learning I just gave you guys, okay? So same thing. Let's copy and paste from this side. BOS to downside. Why is this important? Since we have this high pushing to new lows, this is now going to be inducing sellers. Sellers are induced. Sellers want to be selling this market, okay? We don't want to be doing that, but this is what retail, okay, whatever you guys want to call it. This is what I understand that liquidity is going to get built to the upside now via seller liquidity. Okay, so same thing can happen. This low rejected something from the past. Understanding that now retail are going to be using these regions as possible rejections. So again, you can anticipate that the market will come and test these areas sometimes, okay, and give a reaction, but typically that just gives us an opportunity to buy. So you'll notice sometimes that I'm going to be buying these areas down here, targeting new highs. Okay, and then same thing occurs. Look, we'll get a low sometimes and then go up, respect the high, come down. Same thing that's occurred over here is happening here, just on the flip side. BOS for retail. So taking what I just taught you guys on the previous bullish example, and now in the sell example, who's induced here? Sellers. Okay, they want to be selling where? In here. Again, what typically happens is the market will come all the way back and respect it. Now you have to ask yourself why. Why are we respecting this region to the left-hand side? From a retail perspective, remember, simple stuff. Low taken, sellers want to be entering in at this high. Same thing here. Low taken, sellers want to be entering in at this high. All right, so we understand that. Now, this goes back to all the other videos I've been showing you guys. This is when we like to buy. These are the times we like to buy in these regions. Because why? We have now just engineered liquidity to the upside, AKA seller liquidity. Every single time the market takes out a low, it's inducing sellers. I'm going to draw this on as well just to show you guys. Look, we take out this low, the market reacts off the high once, twice, 3 times. That's when we look to buy back up. Boom, right here. So it's basically the same example as the bullish one. You look to sell here, you look to buy here. All right, so essentially, to sum everything up that I've just taught you guys, whenever buyers are induced, we do not want to be buying that market. We want to wait. We want to identify where the buyers are getting in from, wait for them to get trapped, and then we look to buy back up. Now, in the sell example, we want to wait for sellers to get induced. Okay, not only do we want to wait for this low to get taken, we want to see them enter the market. Okay, we want to have an actual reasoning that the sellers are entering. And look what we have here. This whole area, we're inducing sellers. Where? From the left-hand side. Okay, so again, you wait for these sellers to get induced, then they get trapped. Now you look for that sell back down. What typically happens in this scenario, of course, it depends on higher time frame, but what typically happens in this scenario is after the sellers are trapped, that's when the move occurs back down. And these are the moves you want to be involved in. All right, guys, I hope you enjoyed today's video. Since it's a brand new series, let me know what you guys think. Do you guys like it? Do you guys want me to dive deeper? Make episode 2, 3, 4? What did you not understand? Let us know in the comments down below. If you guys did enjoy, toss a thumbs up, subscribe if you guys have not already. We have lots more content coming your way. So we'll see you soon. Take it easy.